Welcome back to Tax Hacks with Alli. Today I want to talk about your, if you ever get a letter from IRS and they tell you you owe money, you owe more money, they changed something you filed, they filed a tax return for you. So these are called assessments or paper audits. You can have two different things happen. If you don't file a tax return, and you should have, IRS's computers, they take all the data that they had and they total it up to see if you would owe them money. And it usually happens about 2 years after you would have filed, within 2 to 3 years of when you should have filed. So if you never filed a tax return, you had income documents that were sent in, W-2s, 1099s, sold a home, something like that, and sold investments, stocks, and you failed to file a tax return, then IRS is going to send you a letter and say, we didn't see a tax return filed for you. And if you don't respond to that letter, then they're going to go ahead and file a tax return for you. The problem is IRS only has a little bit of the information. They don't have the whole picture of what all your deductions are, and they don't give you credit for anything, really. They just give you what they have on their paperwork. So they see you sold a house, they don't know how much you bought the house for. They might say you sold the house for $500,000. They're going to tax you on $500,000, even though you bought the house for $600,000 and you had a loss. You don't actually have any income. So it's really important that if you get any sort of letter like this, you do respond and you do get that tax return filed with the accurate information, so you're not paying huge tax bills that aren't real, that you don't really owe, that aren't, actual tax that you owe. So these assessments happen all the time when people fail to file a tax return. They don't realize something that they did was a taxable event. In an instance of selling a house, you moved and you didn't get the tax form because it got mailed to the address of the house that you sold. So there's so many reasons why you may not have the full picture. Recently, stock brokerage statements have gone to paperless. And so instead of getting your tax documents in the mail, you have to log into your account to get your annual tax forms. That's been a big problem. People didn't realize that they were not going to receive them in the mail. They got all their tax forms in the mail in January, beginning of February. They go see their tax person. They think they've got everything, and they don't. They didn't log into their stock account to get their 1099-R or their 1099-B. So it's very important you get all the documents. If you're not sure if you got all the documents, you can set up an account with IRS for yourself to get your transcripts. And that's where IRS will give you a copy of anything they have record of. And that's really helpful to make sure everybody's on the same page, or to see if there's something that's inaccurate on the IRS side. So an IRS assessment is one way that people end up getting a tax bill. They get a late tax return. They get a bill for taxes they don't really owe. IRS is going to call you single with no kids. Maybe you're married with 10 kids. That's going to change what you owe or get a refund. The other thing is, if you don't file the tax return within 2 years of the due date, so our tax returns are due April 15th of the following year. So for example, your 2022 tax return is due April 15th, 2023. You have 2 years to get your refunds on that tax return. So you need to file that tax return by April of 2025 to get your refund. Well, IRS might send you a bill in April of 2025 saying you owe money. If you owe money, you still owe it. You owe it for 10 years from when it gets assessed, or from when you file the return. But if you do a refund, you only have the 4 years to collect it, or the 2 years to collect it, sorry. The other thing is that a paper audit, or a CP2000. This is when you filed a tax return, you thought you had all the information, and like I said a moment ago, like you moved, you didn't get the forms. So in this situation, you filed your tax return, you got your $10 refund, everything's great, you're going about your business. 2 years later, you get a note from IRS saying, hey, we have a change. We think you missed some information on your tax return. And this can be either you didn't get the information, so you didn't include it, or you included it somewhere that the IRS computers didn't see it. So either way, you're going to want to respond. There's an opportunity to respond to this letter and say, I agree with the changes and it looks like I did miss something. I disagree with the changes, and here's why. I reported it already, but it's somewhere, here's where it is on my tax return. Or I see that I missed something, but your numbers and my numbers are different because you're not giving me credit for what I bought the stocks for or what I bought the house for. So it's really important you do respond to those, you give the information, and don't pay it. If you get a bill from IRS saying you owe more money, don't just pay it. They're often wrong. There's not a human being that looks at those bills. The computer looks at it. It looks at the information they have, matches it up with your tax return. If it can't find it, it doesn't go to a human to go look for it. It just says, oh, they missed it. Here's the additional income and here's the additional tax due. So don't just pay those. Be sure to review it, see what information you have. And if you're confused about it, seek out a tax professional. All right, so that was a little bit about assessments, CP2000 letters, and bills from IRS saying you've missed something. Talk to you soon.